Welcome to the Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So it's been a rally today. A rally of significance is the real question. I guess it was, I'm recording this Tuesday night. Again, everybody's still on self-isolation. Um, it was, a buddy called it a massive two-hat rally on the Dow, and I couldn't help but laugh. But what he was saying is we went through 19,000 and 20,000 today. So that was pretty impressive. And the volume was okay. It wasn't extreme, which is marginally less bullish, but it was still pretty high, so that's good. Everything bounced. It was just a matter of how far did it go? And I would almost say, like if we talk about the sector rotation model, that the farther right you went, the less bounce we got relative to, say, an 8-day moving average or something. I'll show you what I mean by that. And then the VIX broke the uptrend, but it was an interesting day. The VIX rallied all day. It went up. Well, the market went up, which isn't my favorite. Both ugly stocks and beautiful stocks worked. So energy was actually one of the biggest movers today. But obviously names like the semis had a fantastic name. So where do we go from here? And I am not of the belief that a worldwide global recession with 15 Fed announcements is over in a month. So I'd like to be more bullish, but I'm actually looking for a place to sell into this rally up here. And I've bought some names today. I had some names from a couple days ago, some names I wish I still had from a couple of days ago. And with all of that, I think we get a little bit of a rally here, but I don't think we want to stay too long at the party. Okay, so here's the VIX, and my point would be that this uptrend in the VIX broke. We got a PPO sell signal on the VIX on Thursday. You know, this looks like a sell signal, but look at this bar we had on the VIX. So the VIX dropped to 35 and went all the way back up and closed at 60. And you can see that the market had, this is the rate of change indicator for the S&P 500, spiking hugely all the way up to the top. And maybe I should just show you how I set that up. So this is the S&P 500. And then what happens is you put the S&P 500 as another indicator, and then you do an overlay of a rate of change. Because otherwise, if I did a rate of change down here, it would be the rate of change for the VIX, which is the main panel. So, so your indicator, like this PPO, is for the main panel, which is the VIX, and this full stochastic is for the VIX. But what happens here is, if I want to put the rate of change for the S&P 500, I have to do it as an overlay on an indicator. Does that make sense? Hopefully it does. So anyway, and I've set the change period to 1. The bad news is when you have wild swings like this, you're in a correction. You're not in a bull market. So the only good news, or the really big piece of good news today, was we broke this downtrend. And that's a meaningful downtrend to be broken. And again, we're going to talk about targets and ideas around this in a little bit. So the two-hat rally on the Dow. So here we are. We were under 19,000. We didn't quite make it through 18,000, which was good news. So we stopped at 18.5, and now we're rallying up, and we got up to almost 25. So a beautiful move, or a little over 25. So a 2,000-point move, and with that kind of a move, you know, I get the feeling we've started something. But again, we had one of those big rallies here on this Friday, and then the next day we gapped open and we closed on the lows, and this was a huge swing. We ended up being down 15% on the week. So we're still in a very high volatile period. VIX went up while the market went up today. That's not comforting. But trying to get a big rally here, I think the government's doing all it can to try and push good news at us and get us to stop selling. I expect that to work for a little bit, and I don't know if it's a week, a day, or, you know, on Friday we're going to get a jobs report that is gobsmackingly ugly, and so with that, it's hard to really want to be long. So here is the S&P Sector ETFs, and one thing. So this is the absolute change over a 2-day period. What you see here is these things have soared. And with that huge move, energy was the biggest mover up. So this is the change from Monday to Tuesday. Energy was the biggest change, and over here on the left is communication services, and it wasn't that big. Staples and healthcare generally, I mean, they were okay, but I think the big moves were made in discretionary, in technology. All of these really hard oversold. I mean, the bounce in Boeing was so huge today. Boeing was the bounce in Boeing. Anyway, lots going on there. Real estate, it participated, but I think what you'll see when we do the speed lines, just kind of the, what sort of moving average is it getting over, that you'll see that the biggest change was probably the energy sector. So here is the advanced decline line data, and you can see that up here is the Nasdaq, and we clearly broke this downtrend. I mentioned this in my subscriber newsletter on Friday, and I was talking about how to read and interpret these advanced decline lines. But the big thing that we got here was some sort of a break in this downtrend. Now, if we look over here on the left, in 2018, that big 20-point down rally we had, what we got was a rally off the lows that kind of broke this downtrend, and we went up a little while, and then I just want to show you how the market responded. And so we were still in the chop, but at least it took us to the top of the chop. And so that's what we're going to watch for now. Is we want to be picking a target up near, up higher, and maybe it's up around this resistance level, just say 8,000 on the Nasdaq Composite, something like that. This is the advanced decline, absolute advanced decline data. And this bar is, I think it gently takes out this bar, but we're going back to also the thrust that we got coming off the lows back here in early 2019. So this was a sizable thrust. The size of the rally was so big that I still think we're in volatile times here, and short covering played a big part of it. Okay, looking at the high-low data for the NASDAQ, again, we were way down in this lower area. I don't expect it to get above zero. I would say we're going to spend a little bit of time here between the minus 100 level or minus 200 level and the zero level. And we'll just rock around in here like we did back here in the 2018 period that I just showed you. And again, the reason is, how easy is it going to be to make new highs when most things are down 30%. So odds are you're not going to get a lot of new highs. We might get one in a few different names, but even Zoom, which was the big winner so far, I think sold off 15% today. So it was a wild swing. Okay. Let's go on and talk about the advanced decline on the New York Stock Exchange. So same sort of picture. Look at this big volume thrust here. That's a beauty. Gotta like that. Or the advanced decline line thrust. Really like to see that pop up. And again, it was way bigger. So I get that. To me, it seems like we're trying to start a rally out of here, again, based on the VIX. Not so sure. But I think we're breaking this downtrend here. We're using an 11-period moving average of the advanced decline line. You could just see when you're staying generally above zero, that's bullish. We're below zero. We got a reading up here of the 11-period moving average. So, 2 weeks, and we're only at minus 200, whereas we were down at minus 1200. So this is improving, definitely. And you can see all these green bars are starting to add to it. So that is definitely helpful, but a lot of red weight there. This is down to 3,000 and only up to 2,500. So you can get the full drift. Anyway, trying to show you how the breadth changes as we change the base of this market. Moving on to the high-low data. And what happens here on the high-low, again, in between kind of an area below zero and zero, we're just going to focus in here. And these red lines are what I call timelines, and they're just generally how long was it before the market started to accumulate a lot of new highs. And in this case, it was 9 months. In this case, it was a year. We just started it 2 weeks ago, 3 weeks ago. So I think we have substantial time. I would be shocked, and I'd be happy to be wrong. My indicators will flip for me when they do. But wouldn't expect us to come out of a massive 30-point low and immediately start hitting new highs again. I think a lot of damage has been done, and I think we still have a lot of financial issues to work through. Okay, looking at the S&P 500 advanced decline, this still trended off. Oh, this hasn't updated yet, so I'll leave this area because it's not. It's later in the evening, but it's still, these data points still have not updated. Okay, let's go quickly talk about the Toronto market. And they also tried to rally off the lows. TSX was up over 1,000 points, 945 on the close. So that was a beauty. Oh, that might be the advanced decline line data. Yeah, it is. I'm sure the TSX was up over 1,000 points on the day. So that was a nice solid win. And then the advanced decline data was, it's sitting at minus 83 for the 2-week moving average. Not too bad, obviously much better than minus 350. And looking at the advanced decline slope down here, we're trying to break that down sloping trend line. It's barely a blip, and again, we had a pretty big up day, but you can see it takes a lot to kind of change this data. We're looking for, some sort of a base to be built here. I don't expect this to be a V bottom after all of the damage that's been done worldwide. Looking at the high-low, trying to get back up around this 50 level, and again, we saw it in that September, October, November period. We couldn't get back above the zero level for a while, and then we barely got above it. And you can see for the Canadian market, it was almost 3 years that they rattled around, and the market in blue here didn't make much progress. And as we break out to the upside, finally it started to surge. So here we are sitting at minus 50 or minus 40. And again, you won't go much above that until we start to get closer and give it some time to get back into a much more bullish stance. Okay. So let's talk about where I think we might go. And what I want to show here is, you can see this pink line is a moving average. Call it a speed line, a moving average line, whatever you'd like. And then this 20 period moving average. Then I have a Keltner channel here set up in green, and then I have a moving average set up. So all of these, if I turned on the legend, you would be able to understand that. Okay, that'll make it better. So we've got the 8, the 20, and the 100, and then the Keltner band. And so what I want to point out here, the Keltner band uses the average true range to kind of calculate. And so what happened is, all the way through the uptrend, it stayed above it. Now we're below it. So I don't expect us to get back through 2800 very easily. So what I've done here is I've spread out the Fibonacci lines on here. And if you're wondering how to get these extra lines, click on the help button inside the annotate tool. So here's the annotate tool. Click on this question box and it'll help you whether you're on a Mac or a PC. But one of the things that you can do is you click and you make your fib spread, so whatever, like this, and then you go and you grab on the Apple, it's command button, and as I sprint this up, you'll see how it gives me those other lines. And so once I've got those extra lines, this is the 23.6 and the extension of 100. So what I do is I set this at 50%. Okay, just to show you. So I take this information over here and I just want it to touch the top of the prior range, and that's going to be my 50%. So I want to measure what this distance is, and I want to move up 100% of that. So from here to here is another 50%. And so I expect something around the 27-22 would be a first target for the S&P. The 161% projection would get us all the way up to the 100-day moving average. Really, really think that's a stretch to get through the Keltner channels on the first run off the top. So it's a really simple way to do that, just to kind of pick some levels. But 25, 24 is not enough. Like, I think we're breaking through this base, and now the question is, whatever that measurement is, I expect us to move up an equal amount to the upside. And somewhere in here between the 20 period moving average and the Keltner bands is an area of resistance that I'd be focused on. Okay, hopefully that made sense. Let me just delete this because this is not really doing anything. But again, I want you to use that help button over here. It's very helpful on the annotation tool, and we'll show you all kinds of interesting tips and tricks to help make you annotate better. Looking in on the NASDAQ, this is an interesting chart, and the reason is you can see we got well above the 8-period moving average, and this range in here, we extend up, and getting to 100% will actually put us inside the Keltner channel and very close to the center of the Keltner channel. So that would be good. This is the NASDAQ 100, and there's a reason that I'm focused on the NASDAQ 100 because obviously it's the leadership names, but we don't even have a PPO cross here on this chart. We do have a full stochastic trying to turn up, and again, it's on a daily, so this is a really short timeline. So if this ran up and started to roll over, that would probably be the sell signal I'd be looking for. And again, there's no guarantee we even get up that high, but if we pulled back on the open tomorrow and then rallied all day, that wouldn't surprise me. Just trying to get the shorts to add to positions again and then make them kick out by the end of the day, something like that. Anyway, I'm expecting a little more upside after the governments have kind of thrown anything they could at Wall and Broad Street to get this market to try and start to rally. So this is somewhat comforting, and hopefully we do that. Now I want to go back and just let me just see if this chart's updating yet. Not quite. Okay. This is what I want to show you. So on this sector ETF, if we just look, so what happens is I've neutralized the S&P, and again, in order to figure out what's working, then the S&P becomes the flat line, and there's 3 groups that really didn't participate, and then all of these ones pulled the S&P higher. So these ones outperformed over a 2-day period. These ones underperformed and held things down. Now, if I unwind the tape for 2 weeks, the technology and communication services have been doing their work to try and hold things up. But you can see industrial, so Boeing weighing on here. Obviously, the energy sector, bombing of March the 9th, that was relatively difficult. And then we have the utilities and the real estate sector. They've been pulled down. So even though they've been defensive, they've actually underperformed the S&P 500. The issue as we go forward here is these things are moving so fast. I think it's more important to keep this perspective in mind. It is that you want to try and find some of the stronger areas of the markets, and the consumer discretionary was right in line with the S&P 500 today. But the bigger question is, I think everything, like if we take this off, everything moves up. It's just a matter of, are you in the best group? Well, I think if you're going to go to the semiconductors, you're going to go to some of those oversold transports. They had a rocket day to day. Everything was soaring higher. When we get into a situation like that where things are just popping, it's a pretty important clue that we want to try and participate. And again, I think it's a short-term rally, but if you can make 10% in the next few days, either shrink up some of the losses you had and sell at a much higher level, or if you don't have losses, try to lock in some profit. Hey, if you could say you were profitable in March, that would be a pretty big accomplishment for the month. So, just some ideas around trading around here. I want to jump into, and I'm trying to figure out where I put this. It's not where I thought I put it. Let's just say that. Okay, so here's the different sectors, and what I've got on this chart. I should have turned on the labels, but it's the same lines, so 820 and the 100-period moving average. I guess we could turn on the legend, and then you could read that. Full stochastic, and a relative strength compared to the S&P 500. Now, what you'll notice is how everything is doing relative to the pink line here, the 8-period, and you can see big downslope, and we finally broke above it, and we also broke above, I'll call it the back and forth range, as we made a small base here. So now you want to take whatever that base measurement is and just flip it up. So that's how I used the Fibonacci line. I went from here to here, got a measurement and said, okay, I want to go 50% more up to here, and just use the fib lines to help you figure out that measurement. You can also use a calculator. So if this was 82 to 92, that's 10, so it would be 92 to 102 as an example. Anyway, trying to pick some target levels. Don't know if that's going to be where the market stalls. Maybe we got a little more buying euphoria than that, but I have a feeling we have some news coming out that is going to be very hard to swallow. So I have never seen a bull market, a global recession only last a month on the stock market. And if you go back and look at the 1929 chart, and I don't want to go there, the first wave down was about similar to what we've had, call it 35%, 30% on the Nasdaq, 35% on the S&P. And we pull back and then we bounce. And on that bounce, that's really your last chance to sell. And then we have a big major wave down. Now, I don't know if we get the major wave down or if we just consolidate sideways. But I have a whole host of problems with things that are going on out there. So one example would be the Nikkei's debt to, or the country of Japan has debt to GDP of 240%. Normally you start foreclosing, I think Argentina was in around 150. Now Japan's a developed country, so the bond market's a little more patient with them. But let's just say their GDP drops by 15%. All of a sudden now their debt ratio is 280%. Not to mention they're going to have to spend money to try and get the economy going. So now we're at 300 or 320. Now I don't have an answer if 280, 300, 320, 350, 400, 500. I don't have any idea where the bond people start to get nervous that they're never going to get paid back again and actually start to take money out of Japan. And when they do that, I think it will be messy. So that's one example. And just to put it into perspective, the US is at around 106 and they're about to spend a couple of $1 trillion, and that's going to push it up. But I would encourage you to go to tradingeconomics.com. You can see a quick spreadsheet of all of the countries by indicator. And debt to GDP, Japan is first and Italy is fourth. Any issues in Italy? Well, I think there's a few. So looking at those two countries and just says, if debt starts to get out of control, you've got that. A few shows ago, I went through the banks in Europe and talked about, how weak their charts are. Citigroup was down 60%. In order for Citigroup, that's not a European one, the US one, to get from its low back to the prior high, it needs 161% gain off that low to get back up to the prior high. So really massive moves in these banks. And again, when banks are weak, you have to be worried. So I'm not trying to scare anybody. I'm just saying it would be stunning, odd, really weird for us to immediately go back to new highs. And I know there's a whole bunch of bullish stuff going on from the government, but there's also some scary stuff going on in the debt market. Okay, so here we are with the consumer discretionary, and again, we broke it through the pink level, and you're going to see on consumer staples, we're down here. We never got up above this as an example, so just kind of compare as we go through. And I'm working through the sectors in this order on the list we're about to walk through here. Okay, so that's bullish risk on to defensive risk off on the right. So here we go with the consumer discretionary, communication services. And you can see we pushed up, but we still haven't broken through the top of that range. So that's what we're watching for. Volume was pretty light in this particular area. So didn't really get the cooking that we would have expected, I don't think. So here's the technology, and obviously it had a pretty big volume day. These were tough selling days, so let's not minimize how good a 40 million share day was. But you can see over here on the left, this was normal, and we're still well above normal. But look at how well it performed, the technology group popping well above that 8-period moving average. Looking in on industrials, again, Boeing trying to push up here. Volume wasn't quite as high as the selling volume of yesterday. This was options expiration Friday, but again, this is trying to get up, and it's a new 5-day high closing. That's better than anything we've had all the way through the slide, so that's pretty good. Looking in on XLB, what we see here is again trying to break out the bottom of the space, and copper actually had a reasonably good day today. I tried to step into one of the copper stocks. We'll see if it works. If it doesn't work, I'm just out. Not going to worry about it, but I thought it might be worth a ride. Just trying to find some things to pick up here as they're running up. So here's XLE, and again we had this 4-period base being built down here. We've pushed above it. We're just into this pink line. Again, getting up to the 20-period moving average. You know, I'm not expecting much magic, but that's still a long way from 25 to 32. You can make some money in there. That's a 25% gap. Looking in on XLP, this is trying to push up. You can see how far it is below the speed line here, below the 8-period moving average. XLV, same sort of thing, never got back. This is healthcare, never got back above this 8-period moving average. And it doesn't look that defensive to me. I mean, these biotech names were getting sold off hard. So some people were starting to nibble down in here. Well, there's still lots of work and lots of things to fix over there. That biotech area is really risky, so it's usually a risk on tone that makes the biotechs go higher. XLU, still a gap in here, and again the utilities have sold off quite hard, and one of the questions we have to ask is what's utility demand going to be like when we come back. So looking at financials, trying to build a base in here. Again, they touched their speed line. They're holding right in there. I don't have a problem with this. I think it's okay. Again, I'm not so worried about the U.S. banks, but I'm really worried about the European banks and the Japanese banks. I think if all of a sudden things start to go amok there, they could go amok very, very quickly. Looking at the real estate trend down here, you're sitting at, you know, a couple of points off. The real estate, I would say it had it was a good rally, 8% today, but it still wasn't of the same spectacular nature of some of the other ones. And on the semiconductor stocks, I mean, they had a raucous day. They just shot up. These are in order of the scooter ranking, and you can see lots of them are still some of the top performing names. Without question, very, very healthy area to look at. A buddy of mine has owned Skyworks, and look at this nice reversal here from 67 to 87. That's a nice $20 reversal on that after putting up with some pain. These are really, really big moves. So I'm quite impressed that we started to get a kick. And if I just go through SMH, the tracking ETF for semis, you can see on the 5-year chart here, it hardly moved. I mean, relatively speaking, it got down into mid last summer. It wasn't that horrific, whereas, you know, some charts are down below the 2016 lows. But this 150 to 100 was a 33% pullback, trying to rally up. If it got back up into the middle of these moving averages, that's probably the area that I'd want to get a lot more cautious, have my stops up tight. And if we took me out, oh darn, I got out with a, you know, recovering 20 or 25% of my value in the trade I had there. Okay. Going forward, I think one of the most important things to think about is just the large picture. If you just take maybe even the historical chart, go down here under historical charts, this historical chart gallery, and look through there and make sure that you have a feel for how these old charts correct. And you can go look at that 1929 one in there. It's a little too scary for me to talk about today. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday and Friday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thank you for doing that. If you got any questions, please email me at newupdate@gregschnell.com. And good luck trading this week. It'll be wild, but try and maintain caution. Thanks. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.